Okay, so we're going to talk about variance analysis today. As I said last week, we've done a little bit of working out the variances and calculating with the great help of the students. They did supply quite good answers quite consistently, which was quite good to know actually. It is also consistent with the examiner's report that the students are not bad at calculating variances, which is really, really good to know. So today we're going to move on further. We're going to look at the written questions, and because these are bite-sized revision classes, I'm going to do it in a bite size. I can't possibly talk about everything to do with variances, but I'm going to focus on those two questions which cause a little bit more problems with the students. And as far as the examiner reports comes, the students are not performing that great. So we're going to look at investigation of variances. And I'm going to start with the decision of regarding to whether investigate variances or not, because you are not going to be always told which variances to analyze, and sometimes it's going to be down absolutely to you. I would say the first most important element will be looking at materiality of the variances. Are they material? Are they important as far as the decision making is concerned? Are we going to look at absolute figures? So the figures which are significantly higher than others? Or are we going to look at certain percentages? Usually we would probably distinguish between 5 to 10%, and above that will be significant variances, and these are the ones which we would focus in analyzing variances in your written questions. Another area to look for is the trend. If you can see that certain variances keep creeping up, keep showing up as, for example, slightly above the budget or beyond the budget, these are the ones which would be worth investigating. Obviously, there's certain area within our cost control which we are overlooking, and therefore these variances keep showing up as either consistently favorable or consistently adverse. Okay. Another element is to look at the control of the variances. Do we have control of the variances which come up? Was this something to do with the decision-making issue, or is there a reason that there was some unexpected large expense that incurred in the year, and this unexpected expense happened to cause the variance? If it's not within our control, we're not going to be investigating this one, which I'm just going to explain the reason behind it. Finally, I would look at things to do with changes. If you see there is a change which is mentioned in the scenario, for example, we changed the supplier, we changed the for example, material we're using, we bought new machinery. Those changes will be associated with some effects on the variances, and we need to analyze them and see what effect this change had. Okay, and the last one will be the independency of variances. Variances have a tendency to affect each other. Increased, for example, cost of material might have effect on the usage of material. Same with cost of labor. So if we've got more skilled labor, it will affect the efficiency, for example. So these are the things which we need to look for and analyze. I'm going to focus on two exams from a level 4. I'm going to look at the question from the budgeting and one question from decision making and control. As I said, I'm going to be focused on the questions which cause some issues and some problem on the exam, and hope I'm going to clarify some things for you to make it a little bit easier when it comes to exams, which are starting as from today, from this week. So as you can see, the variances will come up in questions 7 and 8 on the budgeting exam. The 7, which is based on calculations, it seems to me that the students are performing really well on this one. So I'm going to focus on question 8. There's quite a few weaknesses there, and it shows it's one of the worst performing exams questions in a budgeting. I'm going to run through them. Okay, so with the task 7, I would say just focus on remembering how costs behavior. This is mainly calculating variances, flexing the budgets. So we're going to remember that costs have a different behavior depending on how they behave. We need to be remembering how to use them when we flex the budget. Variable costs will change with the level of production. Fixed cost will remain the same. So remember, when you flex this budget, the fixed cost will not change. There's some few weaknesses with as far as flexing, for example, stepped costs. Some of the students flex them as variable cost. This is quite a common error. But definitely look at those fixed costs and do not change them. They should remain the same in a flexed budget as they were in the original fixed budget. And obviously, common mistakes like transposition errors, swapping the digits around, mistyping digits. Sometimes you're in stress, you do it a little bit too quickly, take your time. And a very common error of identifying variances, you go as far as calculating them, and then when it comes to identifying whether it's adverse or favorable, either with a minus or with a bracket or with a letter A or F, very often that's forgotten and you're going to lose some marks. Which is a shame because you probably have done them right, just forgotten to put the A or an F at the end of it. And I'm going to look at one of the questions on AAT practice exam online, which is task 8 from the budgeting exam. Not sure if you have done your practice exam on AAT, but I'm going to run through some of the answers and questions and maybe help you to guide you to how to look for information and what to include in your written question. This is an exam. This is a scenario which is based on a business which produces different types of leather gloves. And the information here is provided about how they are produced and what happened in the business in the year. I'm going to just change it into my highlighter here to show you the information which I would like you to look at. Okay, so very often when I discuss this kind of exams questions with my students, I always say to them, take your time and read the question. Don't jump into the answers. Don't start calculating straight away. Just read the question first and take your time and think of how would you feel if you were the business owner. So I'm going to try to highlight this information, which I think is very useful here. Now, the business owner here starts with the budget. Obviously, the original budget was based on the production of sales of 630 pairs of gloves and showed an operation of profit of £183,000. Okay. Do you remember before, you need to remember that before obviously you calculate your variances, this budget needs to be flexed. So my eyes will go straight away into looking for what did we actually achieve this year. And I can see in this budget which is produced here for your attention that they've actually managed to produce 635,000 pairs of gloves. That's quite good. As a business owner, I would say that's really good. I've managed to actually produce more than I planned. Okay, I've also managed, I also need to compare the profit. Okay, they have expected 183 based on the 630,000 pairs production. Budget, if the budget was flexed, that figure will go to 185,000. But when I look at the profit, the actual profit for the year, I can see that my profit doesn't look anywhere near it. So from the perspective of the business owner, I'm going to start worrying here because I'll think, what happened? I expected a higher profit because my number of units have increased. And I'm going to start looking at the variance which comes on the top, which is the sales revenue. My sales revenue also looks good. It's 31,000 favorable. So these are the results which I didn't expect. Obviously, something else has gone wrong. Something else that happened in the business has gone wrong, and this is where we start looking for what variances do we have, and which ones are significant, and which have possibly caused the adverse variance on profit. And we've got two which we can identify quite quickly. We've got material and labor variances, both being adverse. Material minus 51,000 and labor 45,000. Okay. So I'm going to go back to the scenario now and think what happened, what changes happened in the business that could have caused those variances. And as I read through, I can see that there was a shift. There was a shift in demand throughout the year, and increasing sales of gloves in the more intricate two styles. So it looks like what they call it here, it was a change of mix. Okay. If I've suddenly started selling different products than I expected, there could be potentially a change of mix. Change of mix can have a significant influence on the profit because not all the units that we sell have exactly the same profit margins. It looks like these more intricate gloves that we are selling currently have a lower profit margin, and therefore, despite the higher number of sales, our profit have dropped. Okay, what other things do I see? There's also been increased demand for gloves made with best grade of leather. The sales of small and medium sized gloves have also been greater. So I can see quite a lot of changes here. So I can see the change in what I wanted to sell and what I did sell. I can see the change in the quality of material, but I also see that the items, the size of the items have changed. And I'm going to try to link this to those variances. And I'm going to ask James for help here. How do you think the material variance has changed if we link it to the scenario? So how has the scenario and the changes in the business affected the material variance?
Right, so if you could write your answers in the comments section below, and we'll look to see how many of you get this right. Just while we wait for those to come in, Joe asked earlier how many people are sitting exams, and we've got Emma Dobson, who's got one on Wednesday and last one on Monday. Rachel Letts has got one booked, put two booked for July, and Alice has one tomorrow. So good luck, you three. I hope it all goes well for you tomorrow.
Good luck indeed.
And with these assessments, Joanna, I guess it's really important to remember that you know everything written down is relevant information. It's been put there for you to help you get the answer right. So you need to make sure that you kind of read it all thoroughly, right? And everything in there has been put on there on purpose to help you get to the answer that you need.
Absolutely. I find that when my students start highlighting the text, they find that there's not really much left from the text which is not highlighted. And I do say, before you actually submit the answers, read the question again. Sometimes once you've answered everything, you then discover little things which you say, oh, I forgot that. Oh, that's quite important. So read it once before you start the question, but also read it again at the end. That really helps you to understand the scenario much better. So we're trying to link here, I'm waiting obviously for your answer, I'm trying to link here the two significant variances here, quite significant, 51,000 and 45,000, and I'm trying to do it by linking it to the case study. I've highlighted certain areas which have changed in the business, which I believe would have affected those variances, and I'm waiting for your answers to how the material could have changed, could have been affected by those changes in the business.
Okay, so we've got an answer from Leslie who says use of more of the best grade of leather, more demand would affect usage, increased use. Intricate styles may result in more wastage also.
Okay, very good. I do agree that using the more better quality material would have definitely affected my material price. Remember that this is a total material variance. We don't split here between the price and the usage. So well done for noticing that that's going to be affected by both. So price, definitely higher quality material will be more expensive. Usage, I'm going to look at the fact that obviously we produce more small and medium sized gloves. There probably is going to be some savings with the material. What I need you to look and think carefully is that the volume is not going to affect it. The number of units which we produce is not going to be affected, because variances are produced based on the fact that that is now flexed to the actual level of production. So remember, when we look at variances, we don't talk about volume, we don't discuss the number, the level of production, because that's going to be flexed. So we compare like for like here. A very good two answers there. Great. How about the labor costs? How would the labor costs be affected, total labor costs be affected by changes in this scenario? And again, couple of minutes, we're going to look at what happened as far as the labor. Do we have any information about changes in the way we work, how we pay?
So Laura has said that more intricate designs mean more time spent on making the gloves as well as material.
Absolutely, very good. More intricate design will definitely cause increased number of labor hours used. Very good. It might also affect our working time. It is possible that there could be some additional overtime hours which have been worked, and that would affect the total cost of labor. Absolutely brilliant. Thank you very much. Okay. So what we've done here quite successfully, we linked variances to changes. Okay. What we need to do, we need to see how we can now start writing and putting our answers together. Okay, so where am I going to start? I'm going to start where we started analyzing actually the scenario. I'm going to say, if I was a business owner, how would I feel? Okay, and we can see here that the volume has increased, but our profit is not looking that great. I expected £111,000 in profit based on the level of production. I've ended up with a loss of 74,000. I'm going to write it down because it's quite an interesting thing, and it's a fact which we shouldn't let by. So the operating statement here, I'm going to start with that, shows a profit of 111,000. Okay, and I'm going to see how does this relate to the profit which I expected. Now, what's the percentage? It's obviously decreased. How much has the profit decreased from what we expected from the flexed budget? Any calculations from the students? We're going to look at the difference between those, and we're going to calculate as a percentage of the flexed budget here. So I'm going to give you the first. Can you see this, James, or is it too low?
Yeah, no, we can see that.
Okay.
Still waiting for these answers to come in, but well done to Linda as well, because she said it was adverse as more intricate work based on the last questions. That's also right. Well done.
So I'm going to help you here a bit of working. We've got 185,000 minus 111 over the 185,000. And my line is not very straight, but I hope you can appreciate it's not quite so easy as it is on the whiteboard. And what percentage would that give us?
So Laura has asked 60%.
Try again, Laura. Any other answers, James?
Yes, we also have Anita who's gone 40%.
Yeah, very good. There's a 40% difference between what we budgeted here, flexed budget. Very good. So it's 40% here, and there's a 39% difference between what the business owner expected and what the business owner eventually got. So it's the difference between this. Okay. How am I going to write it in the exam? I'm going to say that despite the increase in sales, and our sales growing from 630,000 pairs of gloves to 635,000 gloves, which is a very small increase of 2.9%, our profit has dropped compared to the flexed budget, both flexed budget and the expected profit, by 39%, based on the expected profit, and 40% based on the flexed budget profit. So we show here discrepancy between what we expected and what we have actually achieved. Okay. This is due to three significant variances, and these three significant variances are the variances which we are expected to explain, which is sales revenue, materials, and labor. So I'm going to look at sales revenue. Make sure you state what the variances are here. So I'm going to look at the sales revenue and start with saying that the sales revenue is 31,000 favorable, which means that we have achieved sales above the flexed budget here. Again, what I would do, I would put the percentage here, how much higher were the sales to what they were expected. And again, if you look at the difference between what the actual sales were and the flexed sales were, we can see that that difference is 17%. So material costs were sales were 31%. Mistake here, sorry, it's 2.93%. My mistake. So the sales were 3% higher than we expected. Okay, that is going to be only due to price, never due to volume. What this means is that the price per each item we sold was higher than I anticipated in the budget. Okay, we don't discuss the volume here because the budget has now been flexed. Okay, so what that means that the average price has increased. And again, I would divide the total revenue by the total number of pairs of gloves that we sold, and we could see that the average price was higher by £1.75. Okay, so my sales was £1.75 higher per pair as a result of that shift, and the shift was from the standard gloves to the more intricate ones over the two styles. So people have decided, our customers have decided to buy the more intricate styles, and that has resulted in the increase of price per item by £1.75. Okay. Let's look at material cost here. We're going to try to do that again. So material cost, don't forget to say what the variance was, and this is what we start off with. The material costs were 51,000 favorable variance, which means that we have achieved, adverse variance, which means we have spent more on materials than we had originally planned. Our budget was 305,000. Our actual cost was 356. Okay, so that's an adverse variance. Okay, what can we attribute that to? We're going to go back to the scenario, and we can see we can attribute this to, like you have helped me already to point out this, to higher quality of leather, which we have used to produce those gloves. What we have also given information in scenario is that we've got here a shift from the large gloves to more of the small and medium size. What effect would this have on our variance? If we have a shift from one type of size of gloves to another, what effect would this have on our variance? I don't know if you've got any answers back, James.
No, not yet. Just the delay on the stream. But
Okay. So obviously, if we start producing more of larger gloves, we're going to use more material. But if we go into a smaller and medium-sized gloves, which we seem that the sales have shifted towards small and medium-sized gloves, we would have some additional savings on the material as well. Okay, but obviously that saving has not been that significant if your material costs were still adverse. Okay.
Okay, so Linda has said favourable on usage.
Okay.
And also adverse on price.
Adverse on price. Very good. So we have now analyzed the two variances. We looked at the sales and the material variance. It's time to look at the labor costs. Okay, we're going to do it again. We're going to look at the labor cost. The labor cost is 45,000 adverse. What that means that we have spent more on labor than we anticipated. I would compare those two costs and I would show the increase. What's the increase in increase in the costs? It's going to be the difference between your actual and the budgeted over the budgeted figure, and that gives us 12% above the budget. So we have spent 12% above the budget on labor. What could have caused it? We would go back to the scenario and see what the reasons behind this increased cost of labor are. Now we have, and we've been saying this quite a few times now, we have decided to sell, it happened that we were selling more intricate gloves, and that would have probably caused an increased number of labor hours, potentially also, excuse me, overtime, and that would have affected the amount, the budget on the labor. We would have spent more on the labor. So just to summarize this a little bit, when you analyze your variances, as I said at the very beginning, take your time and read your scenario. Okay, think of what the owner, the business owner will think, the shareholder or the manager. Look at any changes and see how those changes affect your variances. Make sure that when you analyze your variances, you state the amount as it is shown in your calculations, and make it quite clear whether it's adverse or favorable, either by using A or F or the brackets. Compare the variances to the budget. I would say it would always help to see what the increase or the increase was in percentage. Okay. Decide which variances you will be analyzing. Justify your decision by saying that these variances are significant and they have an effect on profit. Okay. And in your answers, link your variances to the changes. And if you can, interlink those variances as well. Okay? Be short, be concise, don't stray from the question, and make sure you answer fully. And I'm going to give you the model answers here so we can see if we have actually done all that we plan to do. So we have looked at the profit. Okay, we did state it is below the original budget. Okay, and we did say that as a business owner, we would be a little bit disappointed because our volume has increased. That's the only time we're going to refer to the volume. Okay, from the moment we look at the variances, the word volume should not come up. Okay, why? Because the variances are prepared based on the flex budget, and therefore we compare like for like. So we split the variances. It's quite nice to actually put the headings on before you actually explain them. So we looked at the sales revenue shows a favorable variance. Okay. I would add on here to say that means that if it's a favorable variance on sales revenue, it means that we have generated more income than we initially planned. Okay, that's the difference in what the flex budget is and what we have achieved actually. Okay, and we state that this will be due to price. It's never going to be the volume. It's always going to be due to price. So favorable variance is going to be due to increase in price. Adverse variance is going to be due to decrease in price. Okay. Remember that the budget has already been flexed. Okay, and looking at the cost and comparing it to the unit, it shows that actually each unit that we sold was £1.75 on average higher than the budget. Okay, and that was due to the shift in demand. Okay, that we have managed to increase the sales revenue. And we look at the material cost again, what the variance was. What does it mean to us? Okay, what the percentage increase or decrease was, in this case a decrease, and what it can be attributed to. Sometimes there could be other aspects. You could come up possibly with other reasons why the variance ended up being adverse or favorable. Or if you can't find an explanation in the text, you can write a sentence that you will investigate the variance. Okay. Sometimes at the time of writing the scenario, you might not necessarily have all the answers. There's nothing wrong with saying that would be further investigated. You can give your ideas of what the variance could have been affected by, but if you run out of clear explanation, you can say this should be further investigated. And obviously with labour costs, we're doing the same. These answers are given to you on the AAT website. This is one of the AAT practice exams on budgeting. That's practice assessment 1 for budgeting, and that's question 8. And moving on to the decision making and control, the 2 exam questions which are focused on the variances are question 2 and question 5. You can see again question 2, most of the students seem to be doing quite well. Question 5 is a written question, and it's focused on analyzing and discussing the information which is given to you in the text regarding sometimes standard costing and the variances. Now, standard costing will kind of be expected. This is where the variance and the budget come from. And I've got a question here for you. It's about the company ESO Limited, who is a manufacturer of high-tech electrical parts that's supplied, and we've got an operating statement here. And the operating statement is actually a little bit of a different question. We don't have financial statements here. We don't have a budget. We don't have a comparison between the actual and the budgeted figures. What we've got here, we've got a standard cost of production that we reconcile back to the actual cost of production. And we've got the variances listed here. We've got both variable and fixed variances and shown whether they are favorable or adverse. And the question, the task here is to, for each of the following variances, explain how they could have been affected by the information above. So again, we look at events which happened, changes which happened in the company, and we're going to look how those changes potentially affect the variances. Okay, so we've got 3 types of variances here. We've got material variances, labor variances, and fixed variances. Fixed overhead volume and fixed overhead expenditure variance. So we're going to try to link them to those changes. The changes was the change in storage facilities. There was an alternative storage facilities that was rented at the beginning of the last month, leading to lower monthly payments of rent. There was a change to do with machinery. At the beginning of last month, an investment was made in more modern and efficient machinery, which has a slightly smaller monthly depreciation charge. And we've got a staff upgrade. ESO Limited recruited skilled machine operators to operate the machinery at the start of last month. and made the existing unskilled workers redundant at the same time. The unskilled workers had to be notified of the redundancy 3 months ago. So for each of the following changes, we're going to see how they affect those 3 different types of variances. And questions to you, how do you think machinery would have affected any of those variances? We're going to do it first from this angle, and then we're going to go back to variances. So could you please tell me how the machinery could have affected any of the above variances? And while the answers come back, I'm going to remind you here that we made an investment. We bought a more modern and more efficient machinery, which has a slightly smaller monthly depreciation charge. What effect would it have on variances?
Just whilst we wait for those, we've got a question from Sarah who's asking if the supervision of staff is increased, then would you answer the question in terms of costs? So more supervision would result in more costs, so it would be adverse.
Yeah, that's a good point. You've got the existing unskilled workers were made redundant. The supervision, it would depend, obviously, I would expect the supervision cost to be a stepped cost. It would depend on the company policy on how we actually allocate supervision. They actually don't give us here information, so that's something which we potentially could have made some savings, because obviously we have recruited skilled machine operators now that potentially would need a little bit less of supervision, and these costs will probably go, what do you think? They'll probably go into our fixed overheads, because that's going to be indirect labor costs. Well done. Yes.
Thanks for that, Joanna, and hopefully that helps Sarah. Right, we're still waiting for some answers to come in.
So just to all of you, we're looking at how the purchase of a new machinery could have affected any of those variances.
Okay, here we go. We've got some coming in. So Suzanne has said favourable material usage, favourable in labour efficiency, adverse in fixed overheads and expenditure.
Okay, any explanation to those?
Nope.
Okay, favourable materials. Yeah, possibly. Why would they be favourable materials? I'm going to look what information is provided. It's a more modern and more efficient machinery. I would suspect that if it's more modern and more efficient, we would probably not have so much wastage. So less wastage, definitely. Okay.
We've got one from Leslie as well, who's also said reduced depreciation will continue to favourable fixed overhead expenditure, and the increased efficiency will lead to favourable fixed overhead volume variance.
Very good. So favourable depreciation charge, lower depreciation charge will affect the fixed overheads. Very good. And obviously being more efficient will eventually also affect our labor efficiency. Well done. How would the storage facilities affect our variances? Anyone has answers to that? We've got alternative storage facilities were rented at the beginning of last month, leading to lower monthly payments. So as we can see from the machinery, that has actually affected every variances we've got here. The storage facilities, we talk about the rent. They were rented, so rent will come under fixed costs. So I would expect some answers coming up to say they would have affected fixed cost. In what way? They are lower monthly payments. So with lower monthly payments, we would have favourable variance. We can see favourable variances here from the fixed overheads expenditure. Okay. And staff upgrade. How would the staff upgrade affect us?
So Linda's coming in with the storage would be favourable to overhead expenditure. So well done,
Very
Linda.
good. Well done. And the staff upgrade?
Think that's probably still a little bit behind for the people watching at home.
Okay, let's have a look what kind of information we've got. We've recruited more skilled machine operators to operate machinery at the start of the month. And we've got some unskilled workers which we had to make redundant at the same time. So there'll be some costs associated with redundancy. How do you think they would have affected us?
We've got Leslie again with higher labour rate is adverse.
Very good. Higher skilled, very skilled operators will probably be paid a little bit more. Very good. So it will have affect our rate. We'll be paying more per hour, but at the same time, because they are skilled, they might potentially save some time. So we will have a favorable labor efficiency. Okay, very good. How about those unskilled workers? We have to make them redundant.
So Linda's come in with skilled labour is efficiency is favourable, but the rate is adverse.
Very good. Very good. Well done. I think I'm going to finish this. I think everyone is quite attentive, which is good. The unskilled workers, obviously, if they have to be redundant, we will have to have redundancy costs here. And the redundancy costs will affect our fixed overhead expenditure. Redundancy costs will be admin going to admin expenditure, and that's going to affect our fixed overhead expenditure here. Okay. So we're going to now flip it. We're going to go from the other side. We're going to now look at those variances, analyze what the variances are and see how we can link them back. So I'm going to start with material variances. As you can see, they are split into material price and usage, and I'm going to identify them separately. Material price shows to be adverse. We can link this back to the fact that we must have spent more for materials. Now, is there any information in the text? Unfortunately not. So we could assume that we either bought higher quality of materials, or which is generally the prices could have gone up. It could have been also the reason of the standards of not being adjusted, but we can definitely see that because it's 5,000 adverse material price means that we have paid more, not bought more, we paid more for the material purchase. Okay, so it could be because of the higher quality of the materials, or because we paid more per materials, maybe because the standards have not been properly adjusted. Okay, material usage is 7,000 favorable. We have linked it already to the fact that we have hired more skilled labor that will probably be able to work more carefully and have some savings in materials and save us on wastage. Okay, and that would probably affect our material usage. As you can see, it has affected 7,000 favorable, means that overall material variance is 2,000 favorable. Okay, so what we do, we look at the ingredients element of the material variances. We're going to analyze them separately and link them back to the scenario. As far as labor variances, okay, the labor rate variances is showing 10,000 adverse. We have linked it already to the scenario by saying that due to the fact that we have hired skilled machine operators, we'll be paying more higher hourly rate. Okay. We also have linked the fact that your unskilled workers will need to be redundant, but that's going to be probably going into our fixed overheads. Okay. The labor efficiency is 10,000 favorable. Okay. Again, we link this back to the fact that the skilled machine operators are now employed. if they are better at what they are doing, they've got better skills, they will be more efficient overall, they'll be capable of producing more components per hour, and they will save us a little bit of time. Okay. They are also newly employed. They probably are going to be a little bit more motivated. They want to show that they are good at what they are doing. Okay. And then we move on to our fixed overhead variances. That's split into two parts. We've got a fixed overhead expenditure variance, okay, that we could link back to lower monthly payments for the rent and also the lower depreciation for the new machinery. And both of them would obviously reduce our fixed overhead expenditure as planned, as budgeted. And the second part of the fixed overhead variance is a fixed overhead volume. The volume will always be linked to the number of units produced. Now we can see that we've got 11,000 favorable, which suggests that we have produced more units than we planned. As you can see, we don't have, there's no ways mentioned how many units we actually produced, but from this element here, from the fixed overhead volume, we can deduct that we have produced more than we planned. It kind of is also coupled with the fact that we have higher skilled labours. We've already deducted that they're probably going to be more efficient and more likely to produce more units per week, and therefore the volume variance indicates this and sort of supports our predictions here. So you can see a different way here of looking at variances. We can link them both ways. We can look at them from the changes within the company, how they affect the variances, but we can also look at the variances and then link them back to the changes. The exam questions in the exam papers kind of go both ways. I think I would overall, I would go back always to this little bit of planner of how to analyze those variances, and remember that we need to always go a little bit beyond what and start asking question, how did it happen and why it happened, and that's always going to be given in the information within the scenario. Okay. And the scenario we provide as an evidence. We say labor costs have increased. How do you know? Because we have unskilled labor that provides us an evidence of increased labor costs because they'll be working longer hours. Okay, have a look at your perspective and also perspective from the business owner. How can you see it? Sometimes it gives us a little bit more information and explanation to variances. And sometimes you will be asked to give a conclusion and make sure that if that's asked from you, that conclusion is included in your answer as well for additional point, or sometimes a solution to the problem. So let's have a look if the way we've analyzed the scenarios link to the variance analysis here. We've looked at material variances, labor and fixed overhead variances. We obviously link this to the scenario. So higher quality material have been purchased to be used in the new machinery. Both factors would lead to adverse price variance. The new machinery, as we say, is likely to manufacture the finished goods more effectively with less wastage, and therefore we've got here a favorable usage variance. So as you can see, we look at the variances and relate it back to the scenario and to the changes in the business to point out how these changes would have affected our variances. Bite size, I think I hope I helped you a little bit with guiding you through how you can analyze variances, how you can include your answers in the written answers. Be careful about not writing too much, sticking to the point and staying professional with your answers as well. So make sure it's laid out in a form of if a nice form, in a nice report form with clear headings and clear explanations. And if you can link the variants to each other as well, which I think you've done really well here, that would definitely earn you extra points. That's all I have prepared for you on variance analysis, just 2 questions, but it is bite size. So I didn't want to take you any further. All I want to do is to wish you good luck. Thank you for listening. And obviously, if there's any questions, I'm still here to help you with that.
Thank you very much, Joanna. So yeah, if you have any questions, please put them in the comments and we'll get those answered before we finish this session. Thank you very much for that, Joanna. There's obviously lots of people asking lots of questions and getting the answers right, which is absolutely fantastic to see.
Okay, thank you.
We'll just give it a minute or two for people to come up with those answers. So you just said that it's important that obviously the students, they make sure that the report is written in a professional and kind of clear way. Is there any sort of element of the exams where they would lose points for having kind of bad grammar or misspellings, etc.?
Not that I know of. Not that I'm aware of, but obviously that doesn't mean you can just write. However, I think there's a spell check available as well on the exam. So try to be as professional as you can, but I don't believe that there are marks which are taken away from your exam. I'm not an examiner, so I would have to refer you back to the examiner, but I don't believe so, and that's the advice I would give to my students as well.
Yeah, I think I from my understanding that's correct. It's just obviously being important that you get you write it in a way that gets your point over in order for you to gain as many marks as possible.
I mean, I always say try to be helpful to the examiner as well. Give them headings, be clear, explain things in a way that are very easy to read, and sometimes write things which are obvious. And I know someone who's going to mark your work know exactly what they are marking, but they need to see from you, you know what you're writing as well. So when you write that, for example, the variance is adverse, say and explain what does it mean. If your labor costs are adverse, what does it mean? We spend more than we planned. I know it's quite easy and straightforward, but this is an indication that you understand what you write about.
We've got a general question from Jonathan Retson, who's asking, he's struggling to think of enough negative situations that could generate favourable variances. For example, a favourable material usage variance caused by staff not throwing out damaged material.
Okay. God, you got me here on spot. I've got nothing comes to our mind at the moment, but I'll think about it and I'll get back to you if you don't mind.
Yeah, that's no problem at all. So Joanna will send us an email once she's had a bit of a think, and we'll get back to you, Jonathan, in the comments a bit later today, if that's okay. Monica wants to know where she can find the recording for this and the slides on the AAT website. So the recording is available on facebook.com/yourAAT/videos. And I think there's a link for that already in the comments. And we'll be uploading the slides for this presentation later on this afternoon. And again, we'll put a link in. So just keep an eye on the comments of this post later today, and you should be able to find it there. Okay, we've got nothing else coming in, so thank you very much, Joanna, for your time.
Thank you very much. Good luck, everyone, with your exams. I hope you all pass and you have a great summer ahead of you.
Lovely. Thank you very much. Yep, good luck tomorrow, everyone. And now let's go back to Joe.